Hey everyone, I got a great video that I'm so excited to share with you, and it's all about investing and getting started early. I wish somebody would have taught me this when I was young, either a teenager when I was 20, because right now I could be a multi-millionaire. But nonetheless, I'm here to share you the details on how you can get started and make your money grow coming up. Hey everyone, it's Ali, the Finance Father, and welcome to my channel, where you will learn all kinds of financial information that your father probably never taught you, such as investing, making passive income, lowering your taxes, credit management, and other personal finance strategies to help you financially live a better life. Now, I'm so excited about today's video, but before we begin, please consider subscribing to my channel as it will really help me out. Now let's get into the details. So one of the things that you should really pay attention to, and especially if you have kids, listen to this video because this is really going to help you out. I wish somebody would have taught me about investing when I was really young and starting out my life. You know, there's only a few places where people usually learn certain information. The first is schools. Now, schools right now, the education system does not teach kids about money or investing or about, you know, as they get older and out of high school, about credit management or how to manage a budget, you know, and survive and be on their own and live, you know, good. So this is, you know, something wrong with the education system, that they're teaching them about science and English, which is all great subjects, but we need to teach them about money management. So the second place that you could learn this type of information is from your parents. Now, my parents didn't know any of this. They never invested, they didn't have that knowledge, and so they didn't pass it on to me. And so I regret not having them learn it and pass it on to me and teach it, because right now I could be a multimillionaire. Now, the third method you could learn is basically on your own. And this is what a lot of people are doing right now in today's age, because they have access to the internet and all kinds of sources and information like YouTube and TikTok. And so a lot of millennials are just going online and learning about stock trading, investing. And so that's what I'm going to teach you about today, is about how to invest and grow your money. Now, I started investing only after I joined a financial services company. So I got a job in one of the well-known financial service companies, and that really taught me, okay, about investing, where to put your money. And I learned about, you know, how great the stock market is and putting your money to work in a mutual fund or in stocks. And I started really low. You know, when I first started out, I didn't have much money. I didn't make much, and I didn't want to save a lot of money and put it away because it wasn't really 100% proven to me at that point. So I only saved like $25 a month in my account. And only later on, I started to realize, as it started to grow, wow, you know, the stock market is a great place to invest and put your money and let it grow. And so, as you can see here in this picture, that the S&P 500, which is the top 500 companies in the US, that fund, or at least those top 500 companies, have grown over the 90 years that it's been around, an average of 10%, which is great. That's a great rate of return. So the other thing that I learned about working for this financial services company is about compound interest. And this is amazing. I think Albert Einstein calls it the eighth wonder of the world. And Warren Buffett, a well-known, respected billionaire and an investor, he attributes his wealth to three factors. One is that he worked hard. Two, he got a little lucky. And three, compound interest. So let me explain what compound interest is. So if you have, let's say, $100 to invest, and you invest that into any vehicle, okay? Now, if you get interest, let's call it 10%, because that's what the S&P 500 has done. But let's say you have 10% interest. Now you've earned $10 on your $100 balance, okay? That $10 is the interest that you got. The following year, you'll get another $10 on that interest. That is simple interest, okay? So you're just getting 10% on your $100 every year. Compound interest means that you're going to be earning interest on top of the interest. So again, the first year, you earn $10 out of your $100 in your savings. The second year, you're going to earn 10% on the total of $110. So your original 100 plus the first year's interest of $10. And so that could be like, $10.50, or, to round it up, we're going to call it $11. And then the following year, your interest earned is going to be like $12, and then $14 and $20, and it starts to grow because the interest is getting compounded. And so that's the power of compound interest. And here I got a slide to show you the differences as you invest, let's say $200 a month, okay? And you can see here in the graph that some of it is your own investment. Second is the interest that's earned on your investment. And third is the amount that is compounded on both your savings and the interest that you have already earned.
An example here. We have two people, Ben and Arthur. Now, Ben begins investing $167 a month, which is $2,000 a year, starting from age 19 all the way through age 26. So that's 8 years. And then afterwards does not invest a single dime anymore after that. While Arthur waits until he's 27 to begin investing the same amount, $2,000 each year, but he invests every year from age 27 all the way to age 65. At the end, when they're both 65, Ben has more money than Arthur did, even though Ben only invested $16,000 out of his own pocket. And this is the power of compound interest.
So as you can see from the example of those two people, those two individuals, the one who started earlier has more money at the end than the one who actually started later, but even put in more money. And so this is the power of compound interest, and it shows that time is your best friend. So if you get started early, you're gonna be in a much better position later on in the future. And this is what I tell my kids, that if they start early in their teenage years or 18 years old, that they could possibly retire in their 40s. And that's exciting to them, even though they may not think, oh my God, 40 sounds like a long time from now and they're older in their minds. But wouldn't you like to have retired when you were 40 years old? This is the power of investing and with compound interest. So where do you even begin to invest? Well, first you need to get an understanding as to what the different available options are where you can invest your money and the different interest rates or rates of return you can get. So the first place is a savings account. Now, I don't really recommend this because the average interest that you're going to get is less than 1% on that type of account. A money market does a little bit better, but still it's going to be less than 1%. Certificates of deposit, these are just places where you lock in a certain period of time, and they're going to be usually between 2 and 3%. Still very low. Government bonds and corporate bonds are where they give you money. You give them money and they will promise to pay you back a certain rate. Usually it's about 5%, sometimes corporate bonds can go up to 6%. Now, all of these I don't really recommend at all, because these are the top two that I believe you should be putting your money in. Mutual funds, we just talked about the S&P 500 over 90 years has done an average of 10%. And individual stocks, well, it really depends on the stock that you invest in. Stocks and the stock market has the probability of going up, like I showed in the graph, but there could be a chance that the stock goes down. And so there is some risk associated with these types of investments, but on average, it should be picking up. This one's a little bit easier. This one's a little bit harder to invest in. And then I wouldn't really worry about the venture capital or angel investors. This is for if you have a lot of money and you invest in a company and then you hope it to have an initial public offering, or what many people call an IPO, and that's going to expand your money, but let's leave that for another video for now. Now, your choice really depends on three factors. One is your time horizon. How long of a period are you going to need this money, or is it, and what's your goal really? Is it for just saving up some money to have later on? Is it for a college education? Is it to buy a car or a house? Or is it mainly for retirement, which means you have a long time to go? The second factor is your risk and your reward that you want. As I mentioned on the rates of return, the mutual funds and the stocks have the greatest rate of return that you're going to get back on your money, but there's also risks associated with it. Those other investment options like the savings account or the bonds, they're less risky, but the reward is not as good. So you have to be comfortable and find out how much risk do you want to take on, or how much reward do you want to receive. And the third factor is actively managing your money. Do you want to participate in managing your money? Or do you want to kind of just sit back and let somebody else kind of take care of that, or maybe have it run on autopilot? So again, the two investment options that I recommend are mutual funds and individual stocks. And the difference between the two could make your decision. So for example, mutual funds are a very passive investment. So you invest in that mutual fund and you kind of just sit back, relax, and watch that money grow. Not much involvement. On the other hand, individual stocks, that requires some active management on your part. You have to watch the stock, you have to pick the stocks that you want, and if you're going to make money on it, well then you need to have and understand what's going to be the price at which you're going to sell. And so that's going to require some active money management on your side. And if you like that and you want to do that, then you can pick that side. Now, I would recommend that maybe you do a little bit of mix of both mutual funds and individual stocks, because I think those are going to be the best places for you to make the most amount of money and grow your wealth. So let's first dive into the mutual funds and go and explain as to what are mutual funds and how you can make money with them. So what really is a mutual fund? Now, a mutual fund is basically, it's a fund where it pools a bunch of people's money. So let me give you an example. If I want to invest with 100 other people and we each put in money into this pot, now there's a person that manages that mutual fund. They take everybody's money and then they spread it out over several companies. It could be 20 or 30. It could be as many as 1,000 different companies. And so they're buying pieces or shares of all these different companies. And so the best reason, or one of the best reasons for investing in a mutual fund is it because it diversifies your money. And so your risk becomes really low. Because in the stocks, in companies, all different types of companies, some companies do well and some companies don't do well. And so there's constant tug and war about, the stocks going up and stocks going down, and then they go up and back down. And so a mutual fund, to make it simple, let's say it invests in 100 different companies. Now these are companies, many could be well known, like Amazon and Google, Facebook, Ford Motor Company, and Sony or Netflix, okay? Now these are companies that offer shares to the public, and this mutual fund takes the pool of money that all these people have put in and then invests it in all these different companies. And so now all these 100 different companies have a piece of the money from this mutual fund, and you yourself are invested in all these different companies. And so now your risk is spread out, because if 50 or 70 go up and a few go down, overall, the fund is going to improve. Now, the second thing that's great about mutual funds is that there's a very low requirement to get started. Like I mentioned earlier, I started with only $25 a month. That's really low, okay? Now I'm investing a lot more, but when I started, I didn't really have much money. So Depending on your situation, you can put in as little as a few dollars every single month, and that money will just start to accumulate and start to grow over time. And the third best thing about investing in mutual funds is that there is a professional money manager that is in charge of managing your money. And so these people go to great schools, they go through a lot of training and education, and they know how to look at companies and which ones are going to do well and invest in those companies. And so there is a little bit of an extra cost associated with that. Usually they get charged, or they get a fee of about 0.25%. So it's really small, but I think it's worth it because they can do a really good job at investing your money. Now, if you look at one of my portfolios, you could see here that this mutual fund and this money manager who is investing my money beat the indexes like the Dow Jones Industrial Average or the NASDAQ or the S&P 500. And as you can see here, it had a rate of return of 62% over the last year. So that's awesome. That is really good. And so I'm glad that I invested and chose that mutual fund, and that money manager is doing a really good job at growing my money. So now there are thousands of different mutual funds out there on the market. Some mutual funds are specific to a certain sector, like the energy, or in all financials, or let's say technology, and they only invest in technology companies. And so if you have a preference, you could also pick a certain mutual fund that is specific to an area that you like. There are other mutual funds that invest only in large companies, which they call large cap companies, or middle-sized companies, or even small capital companies. And so you can determine, all right, do I want to invest in large companies like Amazon and Walmart? Or do I want to invest in small companies, maybe that they're technology focused or that they're focused in healthcare, which is really hot right now because of all of the COVID and the vaccines. And so the healthcare industry is really booming. And so you get to choose what type of mutual fund you kind of want to pick. Now, I've posted a video on my channel that talks about the best way to look at and choose mutual funds and pick ones that have the highest rate of returns and make your money grow like it has for me, more than the 10% S&P 500 average. We're talking 20, 30, and I mentioned 62%. So I placed the link down below in the description. So check out that video when you have a chance. So my second recommendation would be to invest in individual stocks. Now, these can be a little tricky. Like for instance, take a look at GameStop, who's been in the news recently. Now, GameStop has went up, skyrocketed really high, but now it's also crashed down. So if you would have bought when it was low and sold it when it was high, you would have made money. But if you would have bought it as it was reaching its peak and now it crashed, you'd be losing money right now, or lost money if you sold it. And so that's really tricky and difficult to time the right investment. Take a look, another example is Bitcoin. Bitcoin has been in the news a lot recently as well, and so it has skyrocketed and fallen many times. And so if you're on the right side of that trade, meaning that you buy it low and you're able to sell it high, then you're gonna make some good money. But if you're on the opposite side and you're buying high and then you're gonna have to ultimately sell it low, well, you're gonna lose money. And so that's the risk-reward ratio that you have to keep in mind and pay attention to. Now, there are many brokerages that you could use to transact or to buy and sell individual stocks. Some of the well-known ones are E-Trade or TD Ameritrade. I personally use TD Ameritrade, where I go in and invest in individual stocks. And I've also dabbled and played in options, but that's a whole nother video there. But I'll post another video of all the different platforms that are available to you and some of the pros and cons or the benefits and advantages that you get from each of these. Now, choosing a stock is very simple. You may not know, okay, well, there's thousands of companies and stocks out there. How do I know which is the best to go with? Well, look around your house. What do you buy on a regular basis? What do you use? I have an Apple iPhone, and so Apple right there is a great company to invest in. My family and I have Netflix at home, and we watch Netflix all the time, and so Netflix is another great company. I drive a Toyota, Camry, and so Toyota is another great company to invest in. And so whatever you're using around the house, whatever you're buying, and whatever you're interested in, that's the great place to start as to picking which stocks and companies to invest in. So now I've been teaching my kids about investing, and they're very excited about it. And so take my 10-year-old daughter, with my wife and I's guidance and helping her, she has picked several stocks, and using her own money that she saved, she is now investing in these companies. She uses her iPad constantly, and so we recommended, hey, why don't you invest in Apple? She plays on her PlayStation, and so we said, there's another company, Sony. And so now she's really excited, and every week or two, we look at how are those stocks doing in her portfolio, and she gets really excited to see that money grow and know that she's building her own money for the future. Now, don't get really hung up on which type of investment option is best for you, whether mutual funds or stocks. The point here is to get started today, and that way you can get on the path of investing and start making your money grow. Now, I have 4 kids, and I tell them all that they need to invest, and they're really excited. I have some of my kids are invested in individual stocks, some are in mutual funds, and some do both. And it's really exciting when we sit around the kitchen table and kind of compare, all right, how is your stocks doing and how is yours, and compete as to whose stocks is doing better, or looking at the mutual funds and talking about and seeing them grow over time. And they get really excited about that. And they can invest, and so can you, with just little amounts of money today. Again, the whole point is to start investing now so that you could have a greater amount of money later on. I wish somebody would have told me this when I was younger, and if they did, and I would have started investing when I was young, I could be a multimillionaire now. And I tell my kids, if you invest now when you're early, when you're young, then you could retire when you're in your 40s. And wouldn't that be great if you can retire and never have to work again when you're 40 years old? It's amazing. Again, the main point is to get started today. Well, I hope you got value out of this video. Please like and subscribe, and leave me a comment below if there's any other topic you'd like for me to cover. Thanks for watching, and have a great day.